Hello, my name is Mike Swanson. I'm the founder of the website wallstreetwindow.com and also the author of the classic trading book, Strategic Stock Trading. But there's some things going on in the financial markets I want to make sure that you're aware of, because I think they provide some opportunities for us. So take a look at this chart right here. Okay, what you're looking at here is a stock that I do own, and as you can see, it's gone up tremendously over the past couple of years, but you also notice I blacked out the name and the symbol. That's because it's one of my 7 top trading positions in my private trading group, the Power Investor Group, and I don't share those positions with the general public. But that's not what's important about this chart or this video. Put out the recommendation to the private group back in October. But what's fascinating is that despite this incredible performance in this stock, and it has a big market cap, I've never seen it mentioned on CNBC. Completely ignored. And that's because it's in a sector that individual investors have zero interest in right now. And that's the gold mining sector. And there's a lot to learn from that. Any big rally in a market, a stock, or a sector, generally speaking, has 3 stages to it. And that's what I want to share with you. The 3 stages of a big rally and where we are with gold. Stage 1 in a big rally, consider the smart money accumulation stage. That's when the masses have zero interest in something because they either don't believe it can go up or they're completely asleep on the situation. And that's because of what's happened in the past. So gold had a giant bear market from 2012 to 2016. And when there's a big bear market, people aren't interested in buying back into that, or they think every single rally afterwards isn't going to go anywhere. And gold has been going sideways for 4 years. And when something goes sideways for 4 years, it's just not interesting to the media, and the masses want to buy something that has tremendous momentum going straight up, not something that goes up to a high and comes back, goes back up to long-term resistance, comes back down. But I believe we're approaching a point of a breakout with gold and silver, and that's when the smart money accumulates. It's when everyone is ignoring the rally, which we've already gone up from, let's say, 1,200 to 1,350, briefly going above that last week. And the same is true with silver. Silver is even less loved than gold because it's been below 16 for a very long time. But evidence of smart money accumulation is what happens during that phase inside the commercials market. Is you'll typically see a moment in which the smart money, which if you look at the futures market, you've got 3 categories, and you can analyze the commitment traders report to see them. Small money, hedge funds, which is managed money, and then commercial hedgers and producers, which are big operators that use the futures market to hedge production or their operations. And they tend to be right at critical turning points, and also tend to be almost always net short because they're using the market to hedge their business operations. So they rarely ever go net long. Well, with silver, they went net long last month for only the 3rd time in 25 years. That's highly significant. And also during the smart money accumulation phase, typically you'll see insider buying in stocks, which we're seeing some of that, and you also see small amounts of money start to trickle into the small cap market and private placements and financings and so forth. But they still have some difficulty financing, getting investors. Most of them do, and that's where we're still at. So fascinating moment, but typically, as I said, you'll get a rally which everyone is ignoring it, people can't believe it, and smart money accumulates. And that starts to change when stage 1 completes, and that happens when you have a breakout out of long-term resistance, which is really the 1350 to 1400 level on gold. 1400 has not been gone through since 2015. It reminds me of two previous moments I saw in gold. The first time I ever bought a mining stock was back in 2002, which gold was under $300 an ounce. I think it was around $280. $300 have been resistance for well over 3 years. And I actually remember going to a gold investor conference and seeing so many people there that couldn't believe it would go above 300, and then it did. And it was a tremendous bull market for years. But there was a peak made in 2006 when gold went above $700, and that $700 became resistance for about 2 years, a year and a half. And then there was a rally breakout after August 2007, a moment ahead of the Federal Reserve lowering interest rates, and a moment in which the bond market also took off. Treasury bonds shot up in price. Exactly the same thing we saw happen in May. We saw gold begin to creep up to 1350 in May, and the Treasury bond market explode higher. And so have corporate bonds, high-grade corporate bonds. So really a huge defensive rotation of a like not seen, I think, since the beginning of August 2007. Of course, that defensive rotation in August 2007, it lasted for quite some time because of what happened with the banks. So defensive rotations, when they start, can suggest that meaningful changes are coming to the financial markets, even if the masses are asleep when the changes begin. So I know I misspelled the word accumulation, but that does not change the validity of what I'm saying, and shows you that anybody can make money in these markets. And stage two brings in the technical buyers. And these are people that watch charts. They look for long-term resistance points to be broken, and then they start to buy. They're primary momentum traders. And there's people out there that do their homework, that look at the markets and various opportunities every single week, if not more frequently than that. And they're on top of these situations. And a lot of people are watching things such as GDX, the gold stock ETF, which I do own a position in, but resistance on that has been $24 for over 2 years now. And if we close above 24, you'll start to see the technical buyers come in, the so-called momentum traders. And they can spur buying for quite some time. So I think that's where we're at. But that leads us to stage three, and that's when the masses begin to chase. I don't consider someone buying a breakout that has a real plan and strategy, a disciplined trader that uses stop-loss orders or some sort of management money system, a chaser. But the masses are definitely chasers. Those are people that buy stocks simply because they go up without any real game plan. But they're an important part of the market because they can drive a market up higher for years. And we've seen what they have done with the crypto market back in 2017. And they've also had a big role in the marijuana dope stock market over the past couple of years too. But what you're looking at here is a small Robinhood account that I have primarily at this point to see this information. This is a list of the top 100 most widely owned stocks by the number of people that own them on Robinhood. The number one stock is currently Aurora Cannabis. Last year it was Apple, but then Apple got smashed in the fourth quarter and it's dropped down the list, and it's still lagging the stock market averages. But Aurora Cannabis is at the top, and there's about a dozen other marijuana stocks on this list. Cronus Group is one of them, which you can see on the top here. Tesla is a stock on the list. But only one single mining stock is on this list. And none of the mining stock ETFs are on the list, or the gold ETFs are on this list. So that tells me that the small money people are totally asleep. And it's mostly small money people that use Robinhood. And actually, it's the most popular brokerage with millennials because they trade on apps, and it also has free commissions. But it's not just small accounts that are completely ignoring what is happening in gold and the metals market. It's American millionaires too. So this is a fascinating survey. I saw this story just a few days ago by CNBC. They surveyed 750 Americans with over $100 million in their brokerage accounts. And this is what they found. That people over the age of 70 as a whole have nothing invested in gold and silver. Absolutely nothing. They have 45% of their money in stocks, 21% of their money in bonds, but they evidently see no need to hedge themselves against any risk of inflation down the road or anything, much less think that precious metals are an opportunity to make money because they have nothing allocated to them. But it's not just them. Everyone else under the age of 70 have 1% of their money in aggregate allocated to precious metals. That's absolutely fascinating. And it's just absolutely fascinating. So that there's no other sign that the average American investor, the masses, are completely asleep on what's going on with gold and silver and the mining stocks. It's what you're looking at right now. And that provides an incredible opportunity to get ahead of the crowd. Because when the masses trickle into something, to a sector, that's when you start to see sectors go up in a crazy way. And if you get in early before they do, the gains are tremendous. I mean, I can't tell you, well, I can, but it would go on and on and on if I did. But the gains I made in after 2002 in the gold market were absolutely amazing. What some of the individual gold stocks did, and I believe we're going to see that to come, because when that 1% becomes 5% or 10%, it's going to generate incredible money inflows into gold and mining stocks, and it's going to be fun for us, and I want you to be a part of that along with me. So stay tuned for more updates and more videos to come.